Good afternoon and welcome into today's webinar. My name is Jason Sheppard. I'm an IRA specialist here at NewView Trust, and today we're going to talk about leveraging tax advantages in real estate. It's a topic we get from time to time. Actually, it's one of the most common questions we get is, how do I buy real estate? What are the advantages of buying real estate with my IRA? So let's go ahead and get started. Before we kick everything off, I normally talk about this at the end, but I wanted to bring it to your attention. We are doing a holistic investor retreat this year. We're calling AltsCon. It's going to be October 17th and 18th. We're going to have professionals talking about single family real estate investing, multifamily real estate investing. We're going to have oil and gas. We're going to have how to build a fund. Several different opportunities that may be available and may be of interest of you. So mark your calendars. Go ahead and register for AltsCon now, so that way we can see you in October and come on down to Florida and get out of the cold weather that gets started around that time of year up north. We're happy to have you. It's at the Marriott Orlando downtown. As we start all of our conversations off and all of our webinars, you do want to make sure we understand that NewView serves as your custodian for alternative investments. We do not provide tax, legal, or investment advice, nor do we sell investments. We purely custody IRAs, ESAs, which are education savings accounts, health savings accounts, and 401ks that hold alternative investments chosen by our clients. So that's always something we want to make sure we're touching on. We're not offering any sort of advice. The second most common question I get about the self-directed IRAs is not just can they buy real estate, but what is a self-directed IRA to begin with? I get a lot of questions about, how do I open a self-directed IRA? Because they look at our application and the first thing they see is select traditional or Roth. They don't see self-directed. So self-directed is purely a marketing term. It's not it's more about the types of investments the client will be making versus the type of account that they're opening. So a traditional IRA here at NewView is the same traditional IRA you're going to find at any other company out there. The only difference is there's a lot more options that are available to you. Really, there's only a couple things that you cannot invest in. We'll touch on those in future slides. So if you don't see self-directed IRAs, you don't see that on the application, you're not missing it. If it's a pre-tax account, then it's a traditional IRA. If it's a post-tax account, it's a Roth IRA. And I know we have other classes and webinars discussing the differences between those. So refer back to previous classes on exactly how to take advantage of those types of accounts. The benefits to self-direction, number one is diversification. Especially in real estate, self-direction can be very pivotal in a well-diversified portfolio. You can diversify with the types of properties you own. You can diversify the location of the properties you own. You can diversify the different ways to own properties. You can own the land, you can own the buildings, you can own the mineral rights. There's many different ways you can diversify instead of just being in different pots within the same stock market. The benefit also, especially in real estate, is there's significant tax savings. You don't have to worry about capital gains taxes. I know there's talk on those being increased also right now too. So it's a way to essentially put off capital gains taxes almost permanently without having to go through setting up a 1031 exchange. There's great tax savings as well. And the last thing is invest in what you know best. A lot of people know their neighborhood, their part of town better than anyone. So if there's a property in your neighborhood that you see as a good potential investment, there's definitely a way for you to invest in what you know instead of paying somebody to invest in what you don't know. Annually, here is the contribution limits, for IRAs. Both the Roth and traditional have a $7,000 contribution limit with catch-up. There's also the employer-based plans like the solo QRP or 401k. the SEP IRA and the simple IRA, they both have their individual limits, and the solo and the simple have catch-up abilities. And then there are your specialty plans, your education savings account, health savings account. All of these can be self-directed. All of these can own all or a portion of a property. And listen to a recent podcast talking about liquid investments, and they can talk you through kind of what that looks like in a long-term strategy. The only restrictions on IRAs, people restrictions. You can't buy, sell, or transact with yourself, your spouse, your kids and grandkids, your parents and grandparents, and your sphere of influence. If you have any questions about prohibited parties, feel free to give us a call at the office. We're happy to talk through what that looks like, or you can search on the IRS website, prohibited parties for IRAs, and there's a whole list, a whole great graphic that can help from there. Transaction restrictions. Once again, you can't transact with prohibited parties. You also can't buy, sell. You can't live in the property that you own within your IRA. So you want to make sure you're not investing in properties that you plan on living in. It's only for investment, passive investment purposes only. And then investment restrictions. As I'm sure you've heard before, really the only two things you cannot purchase with your IRAs are life insurance policies and collectibles. So memorabilia, art, different things like that. So like I said before, you can't buy, sell, trade, loan, or extend services directly or indirectly. What I mean by that is directly in your IRA or through an LLC that you create that's owned by your IRA. The rules still apply. You can't buy, sell, trade, loan, or extend services to yourself personally or any of those prohibited parties in that. So let's go ahead and jump in now that we've kind of gone through what an IRA is and what you can do with it. Let's talk about the meat of of today's webinar, which is understanding passive real estate investing. So passive real estate investing and passive investing is investing in projects and properties without active involvement in the day-to-day operations. So if you're going to have a rental property, you just need to be a passive landlord. You can't do any of the handyman work. You can't do any of the physical labor on the property, lawn maintenance, anything like that. It purely has to be passive, and you can contract that labor out. On fix and flips, those all have to be done through a contractor. You can't be the hands-on physical laborer on that property. So staying out of the day-to-day operations. And then obviously on mineral rights, you can't be digging or drilling for those rights yourself. But you can earn returns through rental income, property appreciation, or those mineral rights or royalties during that. So let me pause right there. We've covered a lot on the accounts, and we've just started scratching the surface of real estate. Amy, have any questions come across in the chat that we can touch on?
Yes, we did have one. Can I partner with others or pool funds from multiple STIRAs to invest in real estate?
Yeah, absolutely. That's a great question. And before we got too far, that's a great one for there. So especially with property values where they're at right now, you may be saying, how am I going to buy a rental property? How am I going to find a fix and flip if I can't do the work on it? And that's where partnerships and pooling money can come in. You can partner with other IRAs, other private money partners in order to complete these purchases. And you could also partner with somebody that's going to do the work for you and have a profitable partnership and split those proceeds later on. The other things you can do is spouses, even though they're prohibited parties from transacting with each other, you can partner together and complete those purchases as long as the ownership percentage is started at the very beginning, meaning you set that 60-40 partnership on day one, you're writing it in permanent marker, And throughout the life of that property, you split all expenses and income along that same split that you initiated at the very beginning. So if me and my wife were going to purchase a property with our IRAs and be 50-50 investors, and it needs a new roof, we're splitting that roof 50-50, and we're splitting that rental income or that property appreciation at that same 50-50. Those percentages can never change. However, if Amy and I were going to partner on a deal and we were going to split it 60-40 on the purchase price, but then we're going to split the revenue 60-40 and I'm going to do all the work and it's going to be an off balance relationship, that's allowed because Amy and I are not prohibited parties to each other. So great question. I hope that covered everything there. Going to pause. All right. No more questions. Let's move on. Some of the advantages of passive real estate investing. Number one, it can be steady returns, right? Regular income generated through either rental payments can also be done as a distribution. So if you're past that retirement age and looking for regular income, that's a great way to essentially have the rental income paid to NewView, and then you take it out as a normal distribution out of that account. So it can be, even though it's passive, it can still generate that regular income for you. No day-to-day responsibilities. If a property maintenance come up, you either have a property maintenance company that handles that and invoices you later, but you're not going to have to race over it, to handle any sort of urgent matters at that point. You have no day-to-day responsibilities. You either are paying a property management company for that, or a handyman that can assist you with those. There's great potential tax benefits, like we talked about earlier. No capital gains tax. No need to set up a 1031 exchange, because ultimately all that's going to do is delay your capital gains tax. And keep an eye on that. I know we have a class coming out soon about 1031 exchanges. So put a pin in that if that's something you want to learn more on. We should have a class where we're working on scheduling that webinar to bring somebody in to talk specifically about 1031 exchanges. So that way, if you'd like to learn more, we're going to have an expert on those. And then diversification opportunities. This gives you the ability to truly diversify that portfolio, whether it's multiple properties around the city you live in, different cities, different styles of properties. It can expedite that process for you to diversify that portfolio moving forward. And speaking of diversifying that portfolio, diversification in real estate investing reduces risk, potentially stabilizes income, and captures potential appreciation. If you know there's a certain spot or neighborhood in your area that a little bit of injection of capital could help increase different locations, neighborhoods, whatever, it gives you that opportunity. You can also balance risk. Maybe your town isn't the best to invest in, but maybe you know of a town in the next town over, the state, what have you. There's opportunities that can help out, multiple opportunities to help out. Maybe it's a town you used to live in that you find out has a great opportunity, and you can purchase land there, and just creates that general long-term wealth preservation, and increase resistance to market fluctuations, because you're tied to the real estate market versus the stock market, which with the small exception of the housing crisis about 15 years ago, it's been pretty steady there. So let me pause there. Amy, I saw you raise your hand and said there was another question that came in. Let's go ahead and answer that one, and we'll check one more time before we leave on that.
Absolutely. So this question was, are there any ongoing maintenance or management responsibilities for properties held within an SDIRA?
Yeah, absolutely. Good question on that. So first and foremost, most of the responsibilities and day-to-day activities would be held by that property manager that we just discussed, or by NewView if the property's held directly in your IRA. So most of our clients will purchase it directly in their IRA. We handle all of the record keeping functions, bill pay functions, as well as any sort of regular payments that need to go out for taxes and insurance and utilities and anything like that. So we can handle those one-off payments, or we can handle those recurring payments that may come up from time to time for a property that you own. If you decide to do this on your own and set it up through a checkbook LLC, you'd be responsible to maintain all of those functions as well. Really, the only part of the ownership process that the client needs to handle is, kind of the tenant management side of it. Unless you have a property management team that handles that, you're responsible to find tenants and things like that, and make sure you're vetting and doing your own lease agreement and those sorts of things and activities. If you own it directly as the landlord, you're also responsible. We will maintain the records of that property, but we're not going to do collections or any sort of calls about delinquent rents or anything like that. That's up to the landlord, whether that's you directly or the property management, because you are still able to perform those landlord duties on the property, as long as you're not picking up a hammer and fixing things on the property. So in addition to that, if you are hiring any sort of third-party vendor or anything like that, we will provide you with those 1099 forms for that, as well as any of the additional forms that are available. The only other thing that we need to touch on is if you are borrowing funds to complete the purchase. And I meant to touch on this when Amy, our previous questioner, asked about the partnerships. There is a way to get a mortgage, essentially a mortgage for the property. It's called a non-recourse loan or a debt service loan. That's the only type of loan your IRA is eligible to get. And if you are going to use leverage to purchase a property, you may have to file additional tax forms and talk to your CPA to make sure you have everything from there. So, but great question, perfect timing on that. I'm glad we touched on that. That was a great pause point too, because really this is a repetitive slide here. Just kind of reminding you geographic diversification, property type, as well as risk profile. On those properties that may be advantageous for you. So the cost of waiting, if you find the right property, obviously, if you do decide to wait on that property, you could potentially be using a larger chunk of your IRA for that property, draining that hard-earned IRA income that you've been setting aside and that nest egg that you've built from time to time. Also exposed to market volatility. The longer you wait, obviously, the higher those prices could go. And especially in some of the more volatile property markets, it may cost you, in the long run. Also, if that price of that property goes up, the other things go up too. So commissions are higher, fees are higher, everything else ends up being higher. So definitely, if you have the right opportunity and you have the funds sitting in an IRA or in multiple IRAs, the cost of waiting could end up, biting into that nest egg that you've set aside. So here, this is just a graphic here showing you what to do next. Obviously, you can scan the QR code right there, schedule a free consultation with myself or anyone on my team. We'll chat through what account fits best for what you're looking to do and how those advantages could come into. Also, different opportunities like the SEP or the solo or anything that may pop up for you. We'll do an application through DocuSign. It's a quick and easy process, and we'll either get the funds transferred over or walk you through the steps to have your 401k rolled over to NewView. And then once you have everything here, it's just a matter of submitting your real estate contract to our real estate team, and they will process it with the necessary agency, whoever closes those with your local municipality. So let me pause there. Amy, did any other questions come in as we were chatting through?
Yes, we have one more. Can I use funds from my SDIRA to cover expenses related to the property, such as repairs or renovations?
Yeah, absolutely. And I think we touched on that last question. You can use the self-directed IRA to cover those. In fact, if the property is owned 100% by your IRA, you're required to cover those expenses with the funds out of your IRA. So make sure as you're looking for properties, keep that in mind, that if you buy a property and it needs a new roof, those funds have to come out of the IRA, or you have to get that non-recourse loan to cover that, and you may be exposing yourself to additional taxes if you do borrow money for the IRA to use at that point. But all expenses, all proceeds do flow in and out of the IRA. With NewView, if you have an invoice that needs to be paid, you just submit it to our team and we handle that bill pay for you. It can be sent via check, ACH, or wire, whichever you'd prefer, and we can make those payments for you. All we need is the instructions on how to get those funds sent out. So it is something to consider as you're looking for properties. So anything else, Amy? Is that the only?
That's all.
All right, perfect. So it was great talking to you guys today. If you have any questions, stay up to date with all of our latest webinars and our schedule, anything going on with NewView Trust. You can follow us on Instagram, Twitter, LinkedIn, Facebook, TikTok, any of those sites. We have content updated daily. You can give us a call or visit our website, scan that QR code, schedule a time for us to get together and chat. So once again, my name is Jason here at NewView. If you have any questions, give us a call.